Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Monday the 4th of March. Yes, it's post-sequester and the world didn't come to an end, but we also have 3 stocks today that can affect your pocketbook if you're in them in the wrong way. We'll be talking about Dollar Tree stores. Yes, we like those. Dollar Tree against Dollar General. We'll also be talking about TRANSOCEAN. You may remember those wonderful guys that gave us the oil spill almost 3 years ago that changed a lot of things politically here in the country. But anyway, we'll also be looking at something, a one-time giant called United States Steel. That's symbol X. And it's only a shadow of its former self, but we're looking at the charts and we'll be getting a good idea of what is going on with those markets. So let's go right to our portfolio and see what we're looking at. We'll start with the S&P 500. This is a long-term view of the S&P 500 going back to 2005. So it's about 8 years. But you can see where the problems are with this market right now. We've got this real resistance area right around here. And we're right back up there again. And I think this could be a real problem for the market. We've all had a warning signal of red flag in this market. I'm just going to put my weekly in here, and there it is. Boom, you can see it right there. We've had a weekly signal, much like we had here and here, which is the start of the down move. So I think we want to be very, very careful in this market. So let's just go to our next stock market indices, and that's going to be the Dow. And look at the Dow. Now, Dow is a different animal. You're only talking about 30 different markets, and it's still in a positive mode. You got everything plus 90. And we are seeing this market continuing to sort of trying to get past these highs, these all-time highs back here. And I think this is the problem, these all-time highs. It's just like they exist to be broken, but we really haven't gotten through there convincingly in my mind. And I think we could be very, very close. Let's just get close up on this and look at this market on a 6-month, 3-month, 6-month. You can see we're just sort of flapping around here. And this could be a little bit disconcerting. You see there's no real strong momentum. We made kind of new highs, just didn't make new highs in the momentum. So I would not be surprised to see this market go down. The key here is going to be this low. This is the lowest close you had, and the close was 13,784. So if we go below that number, we're going to be seeing this market under pressure. So the number to look at in this case is 13,734. So if it goes below that level, I think that'll be a real problem. So really pay close attention to it. And let me just double check that number because I may have put the wrong one in for you, but let me just take a quick look and see. So it's 13,784, I beg your pardon, 13,784. So let me write the correct number, 13,784. 84. That's the lows right here. If it goes below there, that's going to be a real big signal to be careful and exit this market if you're an intermediate term trader. So let's go to our next market, and that's going to be the NASDAQ, and see what's going on there. We've got a lot of things to cover today. We're going to be covering a couple of stocks that cover countries. We talked about this last week. We'll take another look at those. But this is the composite on this does not look good to me at all. We've had the sort of like halfway rally here. Really didn't get anywhere, running out of gas right around here. This seems to be like a pattern, like we're going to go this way, which is a continuation pattern to the downside. And you've also, if you look at our weeklies, they are negative as well. So let me just clear the screen just to convince you that we're right in that, and show you that our weeklies, boom, there it is. The weekly kicked in there, 3,130. It's a little bit higher, but nonetheless, the action looks like it wants to go lower. Clearly, the 3,180 level is definitely where the market needs to get over if it's going to go higher, but on the downside, it looks like it wants to go lower. Look at the score, 60. That's a trading range. Only the long-term monthly is positive, and that's not enough for us to get too excited about this market. Crude oil, this has been a really strong message the market's been sending you. It's been under pressure. We went on the 90 handle today. We're 89.69. That's a new low for the move. Look at where we got into this market. Short at 95.50. That's a big move, for example, and that'll give you an idea. And we're short from 94.21 on the daily. So all these things, if you look at our World Cup portfolio, you'll see exactly what our position is and how we've been following this market on the downside. I'm bullish longer term on this market, but the market's telling you it wants to go lower, and you don't fight with the market. That's one of the key lessons you want to learn in trading. So let's go to our next market, gold. Now, gold is beginning to look interesting in the sense it really didn't get, this is a key level, 1620. It didn't get over that level. We're coming back down. It's going to be very important to see what we do around this 1560 level, 1555, 1560, to see if this level holds. If it does, we may have the nucleus of a start of this market stopping it going down. But right now, you can see we're short from short from 1653 and 1672, and the last was 1583 was the last signal we had. So we got $10 profit in the short one. We have approximately $80 in the intermediate term and about $100 in the longer term. So nice profitable positions. Stay with them. There's no reason to get out of this. It's gold, yes, I know, but gold's seen a lot of liquidation and a lot of disappointed bulls. So let's move on to our next market, and that's going to be the Dish Network. Actually, we covered that. We're going to miss that one. Look at the pound. We're going to miss the pound. Looking at the euro, something we look at very carefully. And let's just take a look at the euro and see what we're looking at here. So here's the euro, and this is, let's just do 3 months is fine. But you can see the euro has actually come under pressure. We've broken the 30 handle, 130. And this is where the market should find, I think, some sort of support around this 30, but there's no reason to jump in front of it. What we looked at this in market, if you remember, we coached this out of the market. We said this is a very important area, right through here. Okay, that's from approximately the 132.50 area. Oh, let's just go back here. Okay, and if we go up to the 137 area, so 137 on the upside. So if we just take those two away from each other, we have 450, I beg your pardon. So if we take 450 from here, minus 450, that takes us to 128. So I think that could be definitely somewhere we could see this market continue to erode, possibly to the 128. I would say probably 129 would be a conservative bet, but we'll see how it goes. But generally speaking, the longer term trend is positive, shorter term, intermediate term, negative. So watch the market very carefully. So let's go to our next market. And this is Dollar Tree. Now we like Dollar Tree stores, and here's the reason why. I think with the recession or the sequestration, we won't call it a recession yet, but the sequestration is going to provide some interesting moves in this market. Now we've had you can see from our trade triangles, we're long this market from 42.66. It's 45, so we've already got profits in it. But if you scope this out even further, you'll see that this market has made a nice base. This is what we call, you've seen me do this before many times on the show, this is what we call an energy field. That's a hold on, I can't spell today. Hold on one second. Okay, that's better. Okay, this is an energy field. This has a lot of strength to push this market higher. And I think the move has just really begun. I think we may hang around here a little while, but I think we're going to see this market continue to go higher as sales go up for this market. So let's see how that plays out and go to our next market. So let's just clear the screen and go to the other markets we're looking at for today. And we're looking at Dollar General. Does not look as good. You see the monthly is down, unlike the other Dollar Tree. The monthly is down in Dollar General, so we prefer being long the Dollar Tree. So let's go with that one. Looking at rig, this is TRANSOCEAN. This is where the one that had the big rig in the Gulf that basically had the blow up with BP. Now you see it's up to date. It was up to date earlier, so we have a kind of mixed metaphor here. But the reality is, if you just take a look at this market and how badly crude oil is doing and how well the stock is doing, it's a different picture altogether. I said I'd promise you to show you something totally different in this, and I will show you that in just a second, so bear with me. So here's the Fibonacci's. Okay, you pretty much came right back to a 61.8% retracement. I think if we play around here for a while, I think it's going to look good. But the other thing I want to show you, which I think is more important, and I'll just scope this out for you for a second, is, hang on. take that off and scope this out to some distance because I want to show you a big picture of this stock and take all these off. The one thing I noticed in the stock is if you put a trend line in from the highs, the all-time highs, scope it down now here, and look at how perfectly this all fits in. And this is obviously a long-term trend line. Just wanted to get it right. So if you look at this, remember we said with trend lines, you need to have at least 3 places to be valid. This is back in the highs of kind of like April of 08. And you are seeing this market come down, hit the 3 spots pretty nicely. Boom. I think this has made a turn to the upside, a longer-term turn. Now you can see you had, excuse me, lows here, lows here, lows here, lows here. So this seems to be like a really strong base for the stock, around $40 a share. Okay? Very strong base. I think if we go over, right now the longer-term trend is up. We've broken the trend line, and clearly you've had a breakout to the upside there. If we put our trade triangles on, you'll get an idea of what we're talking about. Let's just put them in. And let's do that. Oh, hang on, I'll clear this off, but let's just put our trade triangles in. So you see our monthly is definitely positive from 49.50. We're 52.10 right now, but it looks to me like we could take this out the 60 level. If we take out the 60 level, then I think there's a good chance we'll get back up to the 80 level. So it's a very nice potential play, about a 30% return on capital. You're trading with the major trend. Watch this green, the red weekly trade triangle. That turns green, then you want to get in. And it'll be a nice trade on the upside. So let's watch that very carefully. That's RIG, symbol RIG. It's TRANSOCEAN's the company, and they make a lot of money. So let's look at an old classic stock, United States Steel. And the reason I want to show you United States Steel today is because it is acting terribly. And the reason it's acting terribly is because of the economy, in my opinion. We don't make any steel in this country anymore. And I'm just going to get back here. So hang on one second. Let's just go back to a portfolio. And here's United States Steel. It's currently, all of our trade triangles are negative, 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 negative. It's currently trading at 1983, down 48, 2.3%. And let's just take a look at the chart. Here's the chart. You can see what is stellar. This trade was trading over $180 a share. This is back in July of 2008. And now, look at where we are, $19 a share. Does that tell you a lot? Yes, it does. So let's go real close in, let's say the last 6 months of this stock, and look at the action. This is not good action at all. We put our trade triangles in. You can see we had a monthly just kicked in on Friday. This is not a good sign. 2014, you can see it's already making money, not a lot of money. But it looks to me, if we scope this out further, you can see we can take this market down to 18 quite easily, and we could take this market all the way down back to these levels. This is back in June of 2012, around 18, which is very, very possible. If we scope it out even further, I think we could take it all the way back to these levels here, 2000. I think around 18 is going to find support, but nonetheless, I think this market's under pressure. Every time we've had a signal on the monthly, it's made money. Every time. So let's see what happens this time. But you can see the big move, of course, was down here, catching this move on the downside from this level here, about the 55 down to, I would say about 25.30. And that's a very, very nice move. Here is a nice profitable move, not big, but percentage-wise a good move. And here was the signal we just had on Friday. So watch that very, very carefully. Now, we talked about India as giving a signal for being negative, and I think this is a very important one, but we're also going to be going, let me go back to Italy. I want to show you this Italy. Remember we talked about Italy last week and about how there was a red flag, really a red flag for everybody. This is going to be very, very important to watch. So I'm going to keep this in my portfolio. That's the EWI, it's the iShares Italy Index, and you can see the monthly kicked in today. So let's just click on the chart, take a look at it, and this will be our final chart for the day. But it'll give you an idea. You want to keep a look at this. It's going to be a real driver to push the market, both the stocks and a lot of other things too. So as we scope this in, let's just get a little closer. Do a 6 month. You can see, boom, there's the signal right here at 12.12. It's 12.12 and change. So I think it would be either, if you're in this market, I definitely would get out of it. If you're not in the market, I don't think you want to be a buyer here. I think you want to be, if anything, a seller. So anyway, this is Adam Hewison for Market Club. I'll be back tomorrow, same time, same place. Thanks for stopping by, and every success in your trading today. And watch those trades.